let's continue with a few problems with regards to direct taxes. And so far we've been solving problems pertaining to computation of business income. So this class as well will just do a few additional problems with regards to more additional information also pertaining to business income. So today we're going to be solving a question pertaining to business income of a partnership firm. Question reads, from the profit and loss account given below, calculate the taxable business income of the partnership firm for the year ending on 31st of March 2018. So we have on the debit side, you have your opening stock, purchases, wages, salaries, bad debts, rent, interest, general charges, income tax for the firm, legal charges, insurance, conveyance or transportation, depreciation, bad debt reserve, as well as the net profit. And on the credit side, we're having sales, commission, interest, and the closing stock. And additional information that's been given is, following information was detected from the scrutiny of the accounts. Salaries include payment of salary to partners Alpha and Beta, rupees 24,000 and rupees 10,000 respectively. And then the second point is interest account includes payments made to partners on their capital at the rate of 10% per annum as per terms of partnership deed. So for Alpha it is 2,000, Beta it is 2,500, Gamma also it is rupees 2,500. And rent includes rent paid to partner Gamma, which is rupees 6,000. Travelling expenses of rupees 6,000 were spent on a tour to the UK by partner Gamma to canvass for business, which are included in general charges. And then legal charges include penalty paid for violation of custom rules, rupees 4,500, partnership deed expenses, rupees 500. And then general charges include a purchase of furniture of rupees 3,000 and cash shortage of rupees 200. Half of the conveyance expenses are related to private use of the partners. And new machinery of rupees 50,000 was installed during the year, and the unit is engaged in the production of pesticides. Allowable depreciation on all assets, including new prior plant and machinery and furniture, amounts to rupees 35,500. And then Mr. Alpha is a working partner of the firm. As per partnership agreement, he is entitled to salary as per above, and a copy of the deed was submitted to the assessing officer. And purchases from a firm worth rupees 60,000 were paid by a bearer check. Okay, so before we go into the solution, firstly, let's look at the question once again. Okay. Let's look at the question once again and figure out what is relating to the business, what is not relating to the business. So as always, firstly, we take a look at the profit and loss account. So on the debit side, you have opening stock relating to business, purchases also is relating to business, wages are also relating to business, salaries are also relating to business, bad debts also, rent as well, interest also, general charges also, income tax is not relating to business. Okay, keep that in mind. Legal charges are going to be relating to business, insurance also to business, conveyance also to business, depreciation also, bad debt reserve is not an allowable depreciation. You remember, right? Because it's a reserve. And then net profit is what we take into consideration firstly. And then sales relating to business, commission also it should be relating to business, interest and closing stock also are relating to business. Now, once we figure that out, the next step is to look at the additional information and then point out what we have to take, what we don't have to take. Okay, so first point says that salaries include payment of salary to partners Alpha and Beta. So in the salaries for 40,000, 24,000 and 10,000 we have to take out. Okay, because they are a personal income to your partners and they are not in relation to the calculation of income of the business. Okay, this is for the income of the partners. Therefore, that particular amount of rupees 24,000 and 10,000 should be added back. It's not exactly an expense or an inflow for the firm, but it's for the partners specifically, okay, personally. And then the next point is interest account includes payments made to partners on their capital at the rate of 10% per annum as per terms of partnership deed. Now, when it comes to payments of interest, right, there is certain section under section interest on capital. Under one of those sections is saying that interest on capital paid to partners is allowed if it does not exceed 12% per annum. So under this situation, interest is 10% per annum, therefore it is an allowable expenditure. However, if it was exceeding 10%, if it exceeds 12%, then in that situation it's not going to be an allowed expenditure. Okay, and then rent includes rent paid to partner Gamma. Now, no matter what, rent is an amount that's being paid by the firm itself, so it doesn't matter who it's being paid to. So rent is an expenditure of the firm no matter who it has been paid to. Okay, and then traveling expenses of 6,000 were spent on a tour to the UK by partner Gamma to canvass for business. If you're canvassing for business, obviously it's relating to business. Okay, so we are going to ignore that there's traveling expenses spent. And then legal charges include penalty paid for violation of custom rules. Now, if any legal charges include penalty, a penalty is always disallowed. Okay, so as an expenditure, legal charges cannot include penalty. Additionally, partnership deed expenses also. So when we're talking about partnership deed, it is a capital expenditure, so it cannot be allowed for the calculation of income from business. And then you have general charges include purchase of furniture of rupees 3,000. So purchase and sale of assets, remember it belongs to the income from capital gain. Okay, so it's a capital asset, so it doesn't fall under this particular head. And then there's also a cash shortage. Cash, in other words, it's also termed as capital. So if there's a shortage of cash, it's said to be shortage of capital. Therefore, it'll fall under income from capital gains. Okay, capital, that's why. And then point number 7, half of the conveyance expenses are related to private use of the partners. So if it's for the private use, it means their personal use, and personal use doesn't relate to the business. So half of the total conveyance expenses, half of 8,000, will belong to the partners, and the remaining half is for the firm. So one half will be disallowed, one half will be allowed as a deduction. And then new machinery of rupees 50,000 was installed during the year. And again, if you're installing a new machinery, if it's not available, if it's not recorded in the profit and loss account, then you don't have to do anything with it. You can ignore it. However, if new machinery involved was recorded in the profit and loss account, then it would be disallowed. It would have to be deducted because, again, it's relating to capital. And the 9th point, allowable depreciation, including new plant, machinery, and furniture, amounts to 35,500. So as we've been saying over and over again, if depreciation occurs twice, once in the profit and loss account, like here you have depreciation, right, rupees 30,000, and at the same time here also we have depreciation. So one is disallowed, and the additional information depreciation becomes an allowable depreciation. And the next point is Mr. Alpha is the working partner of the firm, and as per partnership agreement, he is entitled to salary as per above, and a copy of the deed was submitted to the assessing officer. And the last point is purchases from a firm worth rupees 60,000 were paid by a bearer check. Now, any amount paid, worth rupees 10,000 and above, if it's paid with a bearer check, or if it's paid in cash, then it's going to be disallowed. Okay, purchases made with a bearer check exceeding rupees 10,000, 100% of that is going to be disallowed. Okay, so let's solve the problem slowly and understand as we go. So I have prepared the table already, as we normally do. Computation of business income of the partnership firm. Okay, in this situation, there's no name, so they've just given us it as a partnership firm. So we'll just write it that way, computation of business income of a partnership firm. And then you have your particulars and 2 amount columns for the details and the total amounts. Okay, and then as we normally do, we start with the profit in the profit and loss account, net profit, right? So I've written it as profit, or you can write it as net profit as shown in the profit and loss account. So if you look at the profit and loss account in the question, okay, just make sure you have a copy of the question with you, and then, okay, profit in the profit and loss account amounts to rupees 1,25,000. Okay, now, firstly, as always, we'll add first the inadmissible expenses. Okay, so let's write down add inadmissible expenses, or in other words, expenses which are added but which should not expenses which were deducted but which should not have been deducted. So inadmissible expenses in case of business income. So under that, we'll first look at the profit and loss account. So in the profit and loss account, as we've said earlier, let me just bring the question forward. Okay, so we have the opening stock, we have your purchases, then you have your wages, salaries, bad debts, and rent, interest, general charges, income tax. We said that this particular expenditure is not relating to the business. So firstly, let's write income tax and then move forward with the sum. Okay, So under inadmissible expenses, the first item is income tax of rupees 25,000. Income tax. In the inner column, as always, rupees 25,000. Okay, and then after that, you'll be checking the profit and loss account again. After income tax, we have legal charges which are allowed. Let me bring the question again. Legal charges which are allowed. Insurance also is allowed. Conveyance is also allowed. Depreciation is allowed for now because we're not looking at the adjustments yet. Okay, so for now, depreciation is allowed. And then you have bad debt reserve. Reserves are never allowed. Remember that, right? So we'll put in the bad debt reserve under this list. So let's write that. Bad debt reserve. So bad debt reserve amounting to rupees 5,000. Okay, now let's have a look at our adjustments. Now in the adjustments they've given you, salaries include payment of salary to partners Alpha and Beta, 24,000 and 10,000 respectively. Originally, salaries are allowed as an expenditure because payment to employees of the firm. However, when you're paying your partners, partners are owners of the firm practically, right? So as owners of the firm, they are not allowed to receive any kinds of, they are allowed to receive salaries. However, the salaries are not deductible. Okay, the salaries are not deductible in case of calculation of income from business. So therefore, we'll write it salary to partner. First partner is Alpha. So salary to partner Alpha, rupees 24,000. And then for your next partner, salary to partner Beta, rupees 10,000. Okay, salary to your two partners. And then the second additional information given is interest account includes payments made to partners on their capital at the rate of 10% per annum as per terms of partnership deed. Now here again, remember we mentioned earlier when it comes to interest, it is an income that the partners are receiving, right, on their capital. However, when it comes to interest, only when the interest is above 12% will it be considered as an inadmissible expenditure. If the interest rate is 12% and below, okay, it's below than 12%, then it's allowed as an expenditure. Okay, it is an allowable expenditure. However, if it exceeds 12%, then it'll fall under this list. So for now, we can exclude that. Okay, and the next point is rent includes rent paid to partner Gamma, rupees 6,000. Again, as you've mentioned, rent, no matter to whom the rent is being paid, is always going to be an expenditure to the firm. All right, and then moving on. Okay, moving on. Next point is traveling expenses of 6,000 were spent on a tour to the UK by partner Gamma to canvass for business. So it is going to be allowable because it's relating to business. And point number 5, legal charges include penalty paid for violation of custom rules. As we said earlier, penalties are not allowed. So it will be disallowable expenditure or an inadmissible expense. So legal charges. Now there are 2 legal charges, so you have to specifically mention which one is what. Okay, so legal charges, this is legal charges with regards to penalty. For penalty. So legal charges for penalty amounts to rupees 500. Violation of custom rules. Sorry, penalty paid for violation of custom rules, rupees 4,500. And partnership deed expenses are rupees 500. So we write those also legal charges again. Now this is for partnership deed. For partnership deed, the reason being capital expenditure. Okay, being capital expenditure. So we can write the amount to be rupees 500. All right, I hope it's clear so far. We're just following all the additional information as it's been given slowly, one by one. Okay, so point number 6. General charges include a purchase of furniture and cash shortage of rupees 200. So remember cash, when we're talking about furniture, it is in capital expenditure, correct? So general charges include purchase of furniture will be an inadmissible expense. It's not allowed under income from business. So let's write that. Furniture purchased. Furniture purchased, and in a bracket we'll write the reason being capital expenditure. And the amount is rupees 3,000. And additionally, there's also a cash shortage. Cash is equal to capital, right? So capital is going to fall always under capital gains or capital losses. So that is a separate income head altogether. So therefore, here we'll write also cash shortage. Cash shortage. It's pertaining to capital, right? So being capital. Now, if it's a shortage, it means there's a loss. So being capital loss amounting to rupees 200. Okay. Then you have point number 7. Okay, half of conveyance expenses are related to private use of the partners. Point number 7 says half of the transportation is relating to private use, which means half is for business, half is for personal. So the half that is pertaining to business is allowed, but the remaining half relating to personal usage is not allowed. So we have to write this under inadmissible expenses. So conveyance expenses. Okay, conveyance expenses, 50% being personal expenses. Being personal expenses. So 8,000, 50% of that is equal to rupees 4,000 only. Right. Then moving on, point number 8 states, new machinery of rupees 50,000 was installed during the year and the unit is engaged in the production of pesticides. Now, as I've mentioned earlier, when it comes to this machinery, because it wasn't recorded under the calculation of profit and loss account, it wasn't recorded in the original profit and loss account where we got this net profit. Since it's not been recorded, therefore, we don't have to add it back. Okay, because it was not deducted at all originally to get this amount. So we don't have to go through all the efforts of adding it back to this particular amount. Okay, so we're just going to ignore it. And then, point number 9 states, allowable depreciation on assets, including new plant and machinery and furniture amounts to 35,500. So you had a depreciation amount, correct? You had an amount of depreciation in the original balance sheet. Now we understand that we have to record that. So let's write that, depreciation. So depreciation amount in the profit and loss account, it is rupees 30,000. Okay, so that amount also we have to write. And then point number 10 is just talking about Mr. Alpha being a working partner and how he's allowed or entitled to a salary. And then point number 11 states, purchases from a firm worth rupees 60,000 were paid by a bearer check. Now, any purchases which are made by a bearer check excluding 10,000 rupees are going to be disallowed in full. Okay, so the last point, purchases made with a bearer check. Made with a bearer check. Bearer check exceeding, not excluding, exceeding rupees 10,000. It will be 100% disallowed. And the amount is rupees 60,000, the last point, point number 11. So therefore, the whole 60,000 is going to be a disallowable expenditure. Okay, so these are all the expenses which are disallowed. We've taken into consideration the profit and loss account as well as the additional information that we were given with. Right, so let's just get the total of this, all of the amounts which are supposed to be added up. So 25,000 and 5,000, 24,000, 10,000, 4,500, 500, 3,000, 200, 4,000, 30,000 and 60,000. Sum total should be rupees 1,66,200. Please make sure you're cross-checking the values. I could have gotten it wrong. Okay. Now to this, we're going to deduct all of those expenditures which should have been deducted but which were not deducted. Okay, so less your expenditure. Okay, less expenses allowed but not debited. Expenses allowed but not debited. Now, among all of the additional information, there's just one that we haven't used, which is number 9, allowable depreciation on all assets. So it is an expenditure which is allowed but which was not debited or which was not deducted when we were calculating the profit and loss account. So let's do this now. Let's deduct it, less depreciation. depreciation amounting to rupees 35,500. Now there are no other information, right? So I'll just bring it to the outer column straight away. 35,500. Okay, now I want you to go back to the question. Okay, let's go back to the question and look at our profit and loss account. Now if you look at the profit and loss account, under the credit side, on the credit side, we're supposed to have all of these incomes, correct? So under the credit side, on the incomes, if you see, you have sales relating to business, commission again relating to business, right? Commission that they're receiving. And then you have interest also on the investments made by the firm. So that's also relating to business. And then closing stock, which is definitely relating to business. So there are no incomes which are not relating to business or under the situation, there are no incomes which are relating to other heads or other sources. So that means the other addition that we normally give, right? This when we deduct the incomes, like we write normally, less incomes from other heads, incomes from other heads. This one is nil. Okay, this column is going to be nil. So that means there are no further incomes, there are no further deductions. So we can just close this straight away and get the total amount. Okay, close this and we should be getting the total 1,66,200 plus 35,500. So the total, and plus 1,25,000 also. Let's add these two first and then after that we'll do the further calculation. 2,91,200 minus 35,500 should be 2,55,700. Now this is the actual profit of the firm. This will be business profit or business income for now. Okay, this is our business income for now. However, when it comes to this particular section, there is a section of 40B. Okay, if you look at point number 10, they've specifically mentioned that salary, Mr. Alpha is a working partner of the firm. And as per partnership agreement, he's entitled to a salary, which means that the salary, right, which was paid to partner Alpha, okay, the salary of rupees 24,000 is going to be allowable because he is a working partner. If the person, okay, if partner Alpha was not a working partner like partner Beta, then it would have remained as a deduction. Okay, however, because partner Alpha is a working partner, therefore the amount that he is being paid, right, that is allowed as a deduction. Okay, so from this business income, we have to deduct now less allowable remuneration under section 40B. Under section 40B, which is allowable remuneration under section 40B, we can just write it in the bracket, salary to working partner. Salary to working partner. And in this situation, our working partner is Mr. Alpha. So salary of Mr. Alpha, which is rupees 24,000, okay, that will be allowable as a deduction. So rupees 24,000. Okay, so now whatever balance you're getting after deducting all this amount, rupees 2,31,700. Okay, this amount will be termed as the taxable business profit. This amount is the amount on which tax is going to be paid by the partnership firm. Okay, so then we can write down a few notes or a few pointers as to what is what. Okay, some working notes, such as some accounting notes. So these are the notes with regards to the problem. Okay, what is the reason why we took into consideration some deductions, some expenditures, and what is the reason why we didn't take some deductions or some expenditures? Okay, so again, this is generally just for the additional information. So we are discussing here why the rent paid is allowed. So rent paid to a partner is an allowable depreciation of the firm. Therefore, Gamma's building premises are used for the business of the firm. Okay, because the building that is being rented out by the partner is being given for business purpose. And the second point is with regards to traveling. Remember, we said how it's relating to business, so you have to make a mention of it why it's relating, how it's relating, so the examiners understand. So traveling expenses in connection with the UK tour are allowed, being an interest of the business. And then about penalty, legal charges, remember we had penalty, so we're just writing penalty is disallowed. And then payment of salary to non-working partner is not allowed. So under this situation, you had two partners which received salary, alpha and beta. So those people, they are not allowed to receive salary under this situation. Alpha is a working partner, however. And then interest on capital paid to partners is allowed if it does not exceed 12% per annum. And in this question, it was 10% exactly, so which means it was allowed. And then the last point, salary paid to working partner as per agreement is allowed under section 40, subsection B. Okay, so make sure these points are also there when you're solving the problem, okay, just as a note or a quick reminder for yourself what it is or how it is, what is the reason why it's not being added, why it's not being subtracted, okay?